insurance when you are alive. So it depends on the type of life insurance. You have to know the type of life insurance that you can use when you are alive. If you live in Canada, you can use your life insurance policy when you are alive. So one of the reasons why you need to set up your life insurance when you are young, when you are 20, 25. For some people, it doesn't make sense, and I get it. It doesn't make sense that you have to set up life insurance when you are a 20, a 30. It doesn't make sense. My name is Yemisi Lebushe. I'm a licensed financial security advisor. So my job today is to actually talk to you and educate you about the benefit of having life insurance. And I usually like to say this: if you're talking with a professional, you are always free to ask about their license. So for my license, I can explain it to you. I can explain how you can get it from your province's website. So in this time and age, there is nothing like paper certification. Anybody that tells you that they are licensed, you can actually verify their license online from your provincial government website. So from Ontario, they have a website, Saskatchewan has a website, Manitoba has a website, and you can go to this company's website to actually so you can go to this government department's website to actually verify the person's website, the person's legit, if the person is able to practice in Canada, if the person is legit or not, you're able to confirm by yourself. So you don't need any paper copy because paper copy can be fraudulent, right? So when you say you want to work with a mortgage agent or a real estate agent, one of the things you should have at the back of your mind is the first and the most important thing that you should do is to verify if the person is licensed or not. And the way to do it in 2026 and beyond is to check the person's license online on your province's website. Every province has a website and you can verify that person's license there. So, excuse me, the first thing I always tell people to do when they reach out to me is to let them know that they should go online to verify my license from their province's website. So let's go to the topic of today. You see, if you have something and you don't value it, you might not use it as you are supposed to use it. So, and if you want to get something, you want to purchase something, and you don't know the value, you might end up not getting it. So today, I just want to talk about the benefit of life insurance and what you can use it for when you are retired. What can you use your life insurance for when you are alive? What can you use it for? What can you use your life insurance for when you are alive? So, like I said, I am just going to explain at least 5 things that you need to put into consideration. If you decide to buy a mortgage or you currently have a mortgage, right, you can actually use, I want to put my loudspeaker, my speaker here. If you are currently looking to buy a mortgage, one of the good things you should do is to set up life insurance. Why? The reason is your personal life insurance policy, you can use it as your mortgage life insurance. I will repeat that again because it is very, very important that you know your personal life insurance policy, you can use it as your mortgage life insurance in Canada. That's the first objective. Why? Because your life is more valuable than a mortgage. Your life is more valuable than a car. So it makes sense to actually put an insurance tag on yourself because your life is more valuable than a house or a car. And in Canada, there are some policies that are actually useful to you, right, when you are alive. So let us talk about it. I said the first thing you can use your personal life insurance for if you live in Canada is that you can use it as your mortgage life insurance. It doesn't pay for that mortgage when you are alive, but it pays for that mortgage when you have gained admission to heaven. So your family living in the house do not need to struggle about paying for that mortgage all by themselves if they cannot even actually do it. So you can use your personal life insurance policy. You can use your personal life insurance policy as your mortgage life insurance. So they do the same thing, right? Mortgage life insurance protects the lender, which means you have borrowed $700,000 from the lender to buy a property. You have borrowed $400,000 from a lender to buy a property in Canada. What if life happens during that payback period, which is called amortization period. So you are paying your monthly mortgage bill every single month. You are paying it back for the next 25 years. So the lender will say, okay, for the next 25 years, you are still going to be owing me money. If you were to pass away, how will I get my own money back? So that is why um, mortgage brokers, lenders will advise you to get mortgage life insurance, because they know that during that amortization period, if you were to pass away, they will get their own money. So they have protected themselves. So mortgage life insurance means whatever is the outstanding mortgage balance is paid to the lender. That is what it means. Whatever is the outstanding mortgage balance is paid to the lender. Now, that means your family do not receive $1. But if you have your personal life insurance policy, the benefit goes to your family, your loved ones, and they can use that benefit to pay off the mortgage debt, to pay off the outstanding mortgage debt. So you can see why you need to know that your personal life insurance, you can use it as your mortgage life insurance. Yeah. So that's why I always advise my clients. You're new in Canada, in the next 2, 3 years, you want to buy a property. There are some things you should do before you even buy that property. Building your credit score. You need a credit card to be able to build a credit history and have a good credit score. If your credit score is low, maybe banks don't tell you this. When your credit score is low, it affects the interest that they are going to charge you on a property that you want to buy. It affects the type of interest, the amount of interest that they are going to charge you on the car loan that you want to get. It affects all those things. So you want to actually manage your credit card, pay it off, because it helps you to build credit history, and it also affects your credit score. So I have mentioned two things. What should you do even before buying a house? It is good to have a credit card, use it, build your credit history, build your credit score, right? The second thing is you can set up your life insurance policy and use it as your mortgage life insurance. Why? Because your life is even more valuable than the car or the house that you intend to buy. Okay, very, very important that you take that into consideration. Now, the other thing I also want to talk about at this point is I said you can use your life insurance when you are alive, and I said your personal life insurance, you can use it as your mortgage life insurance. When you are alive, you can get living benefits from some life insurance policies. And the way living benefit is explained is, God forbid, if there's a terminal illness, that is, a medical professional says, because of so so and so, you have less than 2 years to live, right? It could happen to anybody. May God bless us with good health. That is called terminal illness in Canada. And because of that, you are eligible to receive between 10,000 to $250,000 from your life insurance policy if you live in Canada. If you live in Canada and you have your life insurance policy. But if you don't have it, you can't claim it. So that is why it is important that you set up your life insurance even when you are young, because when you are 65, 70, you still have bills to pay. I'm still going to have bills to pay. But there are some things you need to do now that can help you have that financial peace of mind even at 65, 70. You don't want to ignore setting up yourself for success. You say tomorrow will be all right. It is true. Tomorrow will be all right. But at the same time, there are some things you need to do right now to make sure that your tomorrow is even very, very all right. Okay. So living benefit, after that is the type of benefit that you can get from your life insurance, God forbid there is a terminal illness, is usually called compassionate benefit. So I'm going to go ahead and just share my screen. I'm going to go ahead and share my screen to explain these things to you. So, like I said, if it is a compassionate benefit that you want to use, you are able to get at least between 10,000, you're able to get at least between 10,000 to $250,000 from your policy. So, what is compassionate benefit in life insurance? You can actually read about this online. What is compassionate benefit in life insurance? In life insurance, compassionate benefit, I have said it with my words, but right here you have what you need to be able to verify. A compassionate benefit, often called compassionate advance or living benefit in life insurance, allows policyholders to receive a portion of their death benefit while they are still alive. It is typically triggered if the insured is diagnosed with a terminal illness, generally requiring a life expectancy of 12 to 24 months. So the truth is, it will happen. When death is going to happen, we don't know. So by the time you gain admission to heaven, you want to be able to enjoy life even before that time. So there are some policies you have to set up now that you are young, so that even at age 85, age 80, if that happens, that there's a diagnosis that says, oh, this is a terminal illness, even for the next 1 or 2 months, 2 years, you are still able to enjoy yourself. Because remember, whoever is terminally ill might not be able to work, and that person still needs money. So the combination of health challenges and money problem is not a good combination. But because you have a life insurance policy, or you had set up this life insurance policy when you are younger and it is still valid, that is, you didn't cancel, so you are able to use your life insurance policy even at retirement. You can see that this another benefit. It is called compassionate benefit. And to receive this benefit, you only need to send the doctor's report. So when you are don't when other people are wasting their money, don't waste your money. These are policies that can get you benefit while you are alive. These are policies that can support you financially at age 60, age 70, age 80, so that we will not be someone that is 70, 80, and the person is financially trapped or financially traumatized. So that is compassionate benefit. Now, we also have what is called living benefit. Living benefit depends on the company that you use to set up the life insurance policy. Living benefit is usually related to disability, inability to work because of a sickness or an injury. For living benefit from your life insurance policy, if you have, that is why you need to work with someone like me that is licensed, that is independent, and I work with several insurance companies at the same time. Why? Because I want to be able to compare quotes. I want to compare this company, and give you the best offer. But if you go to the bank, you are able to get insurance from the bank, but you are not able to compare quotes, and you're just going to be all over the place. But you can work with an independent um, financial advisor or an insurance agent, and I'm able to guide you on how to select the best insurance that meets your budget, right? So living benefit, like I said, is the third type of benefit that you are able to talk about. You're able to get. You're able to get from your life insurance policy. Living benefit is another type of benefit that you're able to get from your life insurance policy if you live in Canada, right? And like I will repeat it again, living benefit, depending on the company that you use to set up your life insurance, living benefit is worded for some companies like this: inability to work because of a disability, because of an injury or sickness. So that means you're able to use living benefit. And living benefit is paid to you tax free. Can you imagine that? So I've talked about three benefits that you can use your life insurance for when you are alive. Now, if you have a policy that has cash value, you can use it when you are alive. Apart from the fact that you have TFSA, you have RRSP, if you're looking for other types of investment, excuse me, that can help you financially, right at age 50, age 60, you want to retire early, you want to start investing, then cash value life insurance might be what you're looking for. Now, it is actually good to say you want to invest, but some people will say, "Oh, I want to buy shares," or you don't know how to do it. Okay, so there are some things you need to know. If you have ever asked yourself, how can I buy shares of Amazon? How can I buy shares of Dollarama or Walmart? I am able to teach you how to do that. Right? You can literally start investing with as little as $50, $100 once a month. If you can afford more, $500 per month, you can start investing for yourself, right? You are working hard, so hard. Your money should also be working hard by investing a portion of it. By investing a portion of it. See, the reason why I am passionate about this is I have lived a life in my first 2 years in Canada that I did not know nothing, and nobody was there to teach me. So I made some mistakes and I learned from my mistakes, right? So even if you start with $50, start investing, $100, start investing, $500, start investing. Yes. The one, how are you doing? Okay. I think I saw your message briefly, but I'm on TikTok live, so I'm not able to reply. Let's see. So that time you sent me a message, you should know that it's night time. You should know that it's night time. So I believe, yes, I've seen your message. So we can meet Saturday or Sunday. I don't. I will. It is night time. Okay, you should know that. That was in the evening, and I answered you briefly after that. So when we meet, we'll talk more. We'll talk more. At least if you check your time, even if you're in Alberta, that time was. What time was that? That time was almost 10 p.m. And you still expect me to you still expect me to be able to respond to all questions at that time of the night. God have mercy upon someone also. Okay, so when we meet in person, we talk about it. Still loving PG attires. It's good to work hard, but your money can work harder. If you are able, no, you don't need to be sorry. I'm just also explaining to you that please pity some of us. We try to share information, but that doesn't mean I neglected you. That time, I'm not supposed to respond. I'm supposed to respond the following morning, but I just did not want to ignore, right? So please let's try and be kind towards one another. That time you sent it was very late. In fact, in my on my own place, I use Eastern time. It was almost 12 midnight. So I can't, please pity some of us now. Okay, so let me know what time works for you. Please, yeah, let me know what time works for you on Saturday and Sunday, and then we can meet. I will just send you a Zoom link. Please, you've not told me which province, because you know the province is going to determine the time. If you live in Alberta, you are 2 hours behind me. So I need just text me the province so that I can take note of the time difference. So thank you everybody that has joined. If God puts it in your heart, please like and share, and thank you for joining. But I have a request. Guak, how are you? I sent you a message a couple of times and I believe you didn't see it, but it's okay. I've tried to reply, no response from you. If God places it in your heart, for those that I always go to your pages to like and share, please like, watch my videos, like and share, or like and comment. At least let's support one another. Anybody that comes to your page to like and support, even if it is 2 minutes, try and do the same thing. Try and do the same thing. Okay, so I'm going to go back to the conversation. Now, I'm talking about what you need to know when it comes to the financial system in Canada, how taxes affect your investment. You can actually know this and know peace. Do you know why? Every single minute, I can literally tell you we pay taxes. When you receive your paycheck, you already taxed before you receive that money. Now when you have been taxed already oh. So when you carry that money after taxes, when you go to Walmart you pay taxes, when you go to Dollarama you pay taxes, when you go to Costco you pay taxes, when you go to a restaurant you pay taxes, you pay electricity bill you pay taxes, you pay Wi-Fi you pay taxes, you pay your phone bill you pay taxes. Can you see that we are taxed so the most expensive thing that we pay for is not that house. The most expensive thing we pay for, do you know it already? It's taxes. So do yourself a favor by understanding the difference between a savings account and a TFSA. They are two different things entirely. Yeah, jollof rice is different from fried rice. It is totally different. The color is different, the taste is different. So savings account is totally different from a tax-free savings account. It is totally different. Your TFSA is tax-free while your savings account is taxable. So you are the one to choose. Some of you will have checking account, you have savings account, money is in your savings account. TFSA you don't have. TFSA is an account that you open it, you can buy shares of, you can buy ETF, set up yourself for success and start investing. Okay, and start investing. Right? There is money to do fine there is money to eat, but there is a portion of your income that you're supposed to invest. You're supposed to invest. Some of these things, they intentionally did not teach us in school, because if everybody is knowledgeable about investing and you know that this 5,000, do let me spend it, let me invest it, and that 5,000 you invest it properly, maybe after 2 3 years, that 5,000 is able to give you like dividend of 500 every month, $500 every month. Can you see? You are not doing anything. It's the money that is working for you. It's $500 small money. $500 will do grocery for you comfortably, and then you can continue working. But there is money that you are supposed to invest. So if you are interested in that, I am able to guide you on how to actually invest and also help you set it up. For those that are joining for the first time, I'm going to put my name in the chat. My name is Yemisi Lekushe. I'm a licensed financial security advisor, right? So we work hard. There are some jobs you will do 8 hours, 12 hours, 10 hours. In fact, some people do two jobs. Then you are doing two jobs, you are the same person doing for the Christmas, for the Christmas. Money to invest, you say you are not investing. You are not doing the right thing. Even if it is $100 once a month, start investing. Even if it is $50, $200 every single month, you can start investing for yourself. And if you need somebody that is patient enough to teach you how to do this, I'm right here to guide you on this journey. So now you can set up your tax-free savings account, custom savings account, RRSP, right? So far you know the different characteristics of this investment policy. But you see this morning, this topic that I'm talking about today is a topic that people don't like to talk about. It's okay. I know what I'm saying. It's a topic that a lot of people don't like to talk about. So if you set up, some people will say life insurance is not beneficial to me. It's only beneficial to when I pass away. It's just because they don't know the value. It's because they don't know the value, right? Okay. So let me explain again. If you intend to buy a mortgage, whether you want to buy an apartment, you want to do mortgage, you want to buy an apartment, or you want to buy a condo, yes, so far you want to buy a property, take note that your life is more valuable than that property. So most of the time you're going to have to set up insurance for your car, insurance for your house. You can also set up insurance on your life. Now, your personal life insurance policy, you can use it as your mortgage life insurance. So let me talk to you about this. Mm, Excuse me. I've mentioned it in like 10 or 15 minutes ago. Excuse me. When you have your personal life insurance, you can use it as your mortgage life insurance policy. It simply means it doesn't pay for your mortgage when you are still alive, but it pays for your mortgage during the amortization period, such that your family living in the house are not affected. That is what. Now, if you say you don't want to do personal life insurance and you have mortgage life insurance, let me tell you what you don't know. Dat mortgage life insurance, the benefit, good evening, the benefit goes to the lender. So you have used your own money to set up mortgage life insurance, and what mortgage life insurance means is, right, if life happens, you gain admission to heaven, whatever you owe on that mortgage is paid to the lender. So the lender has protected themselves. It is true, who wouldn't do that? If you borrow me $500,000 and I use that money to buy a property, you want to make sure that I'm able to pay you back. That is what mortgage life insurance does. It says, I have borrowed, let me see, I have borrowed you $500,000 and you are going to be paying me back 2,000 every single month for the next 25 years. But let me see, if you were to pass away, how will I get my money back? That is what mortgage life insurance does. So mortgage lenders are going to motivate you, energize you to have mortgage life insurance. Why? Because they want to make sure that even if something happens to you, the money that they borrowed you, they want it back. The money, that is the benefit of having mortgage life insurance. So the benefit goes to your lender. The benefit does not go to your family. Yes, but the mortgage is paid off. Thank you, PJ. Thank you. God bless. The benefit is paid, sorry, um the outstanding mortgage balance is paid to the lender because you have mortgage life insurance. But $1 does not go to your family. That is mortgage life insurance. I'll repeat it again. Mortgage life insurance means you put insurance on your life. That, see, Mr. Lender, you borrowed me 500,000 to buy my property. If whenever I'm still going to be owing you money for the next 25 years, look at it this way. After 25, 20 years of having that mortgage, you still owe, let's say, like 100, let's say 80,000. you owe on that mortgage. If life happens, God says, come and rest in heaven, come and enjoy heaven, you get admission to heaven, you are still owing that person that borrowed you money. So the person that borrowed you money has actually motivated you to have mortgage life insurance. What that means is at any time during that 25 years amortization period, which is the period that you are paying back to the lender, if life happens, you are still owing and you pass away, they get their money because you have mortgage life insurance. So when you have your personal life insurance, it's still the same thing. The difference is that your personal life insurance, the benefit goes to the lender. Sorry, the benefit goes to your family. Your personal life insurance, the benefit goes to your family. But your mortgage life insurance, the benefit goes to your lender. The only person that can teach you this thing is an insurance agent or a financial advisor, because we know the difference. A mortgage lender is just concerned about their own pocket. That is why the currently maybe you have mortgage life insurance, and if you are looking to buy a mortgage, it's actually important that you know these things ahead of time. That's the first thing. More, you can use set up your personal life insurance even before you buy a property. Your life is more valuable than a property. That's the way I will tell you, because for me, I got my life insurance before I bought a property ever, because I know that it is somebody that is alive that can buy a property. It is somebody that is alive that can ride a brand new car. But people will insure their life and they will procrastinate. They will insure their car and say life insurance is not important. For me, my life is more important than a car. I'm sorry. I don't know if I my life is more important than a car. So yes. Another thing that you can use your life insurance for is what you have on the screen. I said from your life insurance policy, you can get compassionate benefits, and it is a benefit you can get while you are still alive. But to receive your compassionate benefit, it is tied to your health. God forbid if there's a health challenge and there's a medical report that says um, the person involved has a terminal illness, or yes, or has a life expectancy of less than 24 months, that person can send in their doctor's report to enjoy their compassionate benefit from their life insurance. And I put a value to it. Because you have a life insurance policy, God forbid, the terminal illness might occur at age 75 or age 80 or age 85. So you can just send your doctor's report to receive that benefit because you have a life insurance policy. And the benefit you are eligible to get is between 10,000 to 250,000, depending on the policy that you have. So if you have a $50,000 life insurance policy, so that maybe like half of that is what comes to your pocket. If you have a 500,000 life insurance policy, half of that is what you're eligible to get. If you have a 1 million life insurance, you are only eligible for 250,000 compassionate benefits from your life insurance. That is how I can explain it to you guys. Thank you so much for the support. And some life insurance have living benefit. God forbid there's a disability, you only need to send the doctor's report. Maybe because there's an injury or there's a sickness, you only need to send the doctor's report to receive your benefit. You only need to send the doctor's report to receive your benefit. And guess what? You can enjoy your living benefit while you are alive. And then you can concentrate on praying, right? Let me know if you have questions in the chat. Let me know. Okay, let me know if you have questions. And then okay, so it's been a wonderful session today. Like I said, I love to share my screen to explain these things to you, and it's a privilege to have you here. Thank you so much for joining me.
Mommy,
Yes,
I want to do my stuff on the laptop.
what type of assignment do you have?
And
I'm coming.